You're tuned back into Agriculture Today, and we continue our conversation on the grain market with K State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, as we continue talking about these different commodities, wanting to begin this segment on the soybean market for the domestic side.
I think, yes, I think, Guy, in the first segment, you may have mentioned how harvest over half done, moving strongly. The dry weather, if it in parts of the Corn Belt to the north or west that we haven't got to yet, if dry weather late season hurt yields, it hasn't showed up a lot yet. That again, that in the on the October 11th report, the USDA did project that soybean yields would be down just a bit, 1/10 of a bushel, down to 53.1 bushels per acre nationally. And there really weren't any major changes that came out of that grain stocks report, unlike for corn. A few minor changes back and forth for the balance sheet, but in general, ending stocks last year at about, well, projected to be 342 million bushels, ending stocks last year. Now the numbers projected for this coming year with the large crop to be harvested, now they're projected to grow to 550 million. So, up over 200 million bushels. Stocks to use last year, for the year we just finished up, ending August 31st, 8.3%, and now projected to be 12.53. So our hope for that situation change probably rests for the producer way south of here in South America. Guy, I'll throw that over to you it's really kind of an international story at the moment.
Yeah, well, not a lot changed in the international situation. Just going back to your harvest comment, beans are sort of being finished up, and with the big carries that we had, and due to the challenges of transportation there for the last 4 to 6 weeks, I think those beans got tucked away pretty good, either by the farmer or by the country elevator. And just looking around the local processor bids, I don't know if they've necessarily got the coverage they'd like to have, but once those beans have got put away, I think they're going to be in pretty tight hands for some time. So it'll be interesting to see what that does for basis. Although a number of processors, I think, will be keen to gobble up some of the beans that are still out there yet to come to town. Looking at the global numbers, look, not a story of unchanged. Ending stocks up 70,000 tons from last month, still 22.3 million metric tons more than last year's total. So the balance sheet is a little bit looser. China imports unchanged at 109 million metric tons compared to 112 last year. Their crush is up 4 million metric tons, though, from last year at 103. That's unchanged compared to 99 last year. Interesting thing about China is trying to reconcile the differences between what China's customs numbers are and what people are picking up on the shipping stems. Shipping stems showing quite a bit more beans have gone into China last year than what their customs data shows. Production numbers unchanged globally at 169 million metric tons compared to 153 last year. That's unchanged. South American exports forecasts were unchanged. Argentina at 4.5 million, Brazil at 105, Paraguay at 7.3. For that southern Brazil and Paraguay beans, we're still seeing dry weather down there in the south, affecting that Parana River, making logistics a bit challenging. So they're having some challenges there as well. The other key thing I think that's important to talk about is Brazil's effectively run out of last year's bean crop. We've seen that market now shift logistically to North America with a North American focus. We're competitive now with Brazil and South America, and it should be a U.S. market at least for the next 4 months. The key will be when does the Brazilian new crop come back on? And as you mentioned earlier, that dry weather we're seeing in South America delay planting a bit, or just how much will get planted. And it's going to be the size of that South American crop 6 months from now that's going to drive those summer prices that we'll be looking at.
If we do see movement here, you might see some anticipatory movement, if I can say that right, through in coming months if they just can't get the crop established. But my own take, Guy, and just in watching the markets and when they respond, I think they'll wait till after the first of the year to really have proven to them that any weather issue would come to play, and that comes into play. It kind of makes for a risky roll of the dice for people holding beans unpriced here in the United States. As you know, do they wait for the possibility of a weather-driven rally from way south that would come in and impact grains or not? And really, corn and soybeans are in the same boat there. Again, the supplies we have right in hand, pretty good, but still risk maybe more than normal right now, given their weather conditions or dryness, that their problems as we enter early 2025 could impact things. It puts us in a speculative cash market position, but that's so often what we do.
Yeah. Well, look, with the farmers having most of their beans put away, it's going to take a significant flat price move to shake any of those loose. And for the country elevator, I think he's got those locked down pretty good. Probably got his hedges starting to move those out forward. And it's going to take May forward sort of basis improvement to shake loose any hedge stocks. And as you said, they're going to be watching South America pretty close here for the next 3 or 4 months.
Dan, what are we seeing for wheat?
Not a lot of change in that October 11th supply demand balance sheet, but a few things to note. Did see that again coming out of the September 30th annual small grain summary that U.S. wheat yields overall dropped a little bit from 52.2 down to 51 bushels per acre, and the size of the crop decreased by about 11 million bushels, still 1.971 billion bushels, and that's higher than 1.65, 1.8 the last 2 years. So that's part of the issue in the wheat market, and that not a lot of other changes. We did see have seen more imports come in, about 10 million more, and a lot of those they're probably they can come nowadays. Some of that crosses the border from the north, but also some can come from Europe and come at least to the coast. So that's something to watch. Kind of a surprise to me anyway. Out of that last stocks to use report, we did show more wheat feeding, even though prices aren't down to, at least in our neck of the woods in Garden City, you still have ratios about 115, 120% wheat of corn prices. And normally we have to get lower to see wheat feeding come in, but that's in play. We did see the USDA increase the projected exports of wheat to 800. They've left unchanged the exports for this year, 825 million bushels, and that is a 4-year high, which is we're glad for the trend upward from previous years. The last 2 we were at 762, 707, but in our heyday of market leadership, we'd be at 950 to a million to a billion bushels, I think one time up to about 1.2. So still shows the challenge that the U.S. has in competing in world markets. I do want to talk about on a class by class basis here in the hard red winter wheat this year. We produced a crop of 770 million bushels. A year ago, we were 596, so clearly an increase. Ending stocks last year, 134 million bushels for hard red, historic low. This year, we're projected to be 220, which is great, but that's still the second lowest on record. It just shows how bad we were last year. Guy, I want to throw things over to you on the international side for wheat.
Yeah, wheat, again, it's a story similar to soybeans, mostly unchanged there. But we'll look at production. Production was slightly lower by 2.8 million metric tons to 794. It's still higher than last year and a record crop, but they did shave a bit off of that. When it comes to other countries, Ukraine was mostly unchanged. Russia was a little bit lower on their production number. Argentina crop exports were unchanged. Canadian production unchanged. China estimate unchanged at 140 million metric tons, and Australia unchanged at 32. Ending stocks estimated pretty much the same as last year. So there's still going to be plenty of wheat around there. Stocks to use is slightly lower than last year at 32.1 versus 33.4. So it's tightening up a bit, but nothing too great. If you want a good news story, U.S. exports were forecasted a 4-year high, but for hard red winter wheat, if you're sitting here in Kansas, it's still the second lowest ever. So it's better than last year, but not by much on that. If you're a soft red winter wheat grower, those exports were lower than last year, but their production has dropped on that wheat by class, as it's just increasingly difficult for wheat in the eastern corn belt to compete with corn production. So let's just say I'm modestly bullish wheat. It's going to follow corn. Corn's going to be the leader on that, I think.
And just quickly, I'd add in that when you look at you talked about the wheat ending stocks to use, world ending stocks to use, world minus China stocks to use dropping about 1% a year. From 2 years ago, 21%, 20.4 last year. This year projected to be about 18.9. So tightening up. That continues to trend for about the last 10 years. And you know, I've talked about this guy. With all the pessimism that's out there in the wheat market, again, hand to mouth, we have enough supplies, but these issues shaking that kind of shake up the Black Sea region. You talked about missiles flying, etc. And now we've got another second hot war over in that part of the world. Wheat sets are vulnerable to having to respond to geopolitical risks, and we have moisture projected this weekend to come that could help U.S. hard red winter wheat seeding. So we'll see where all this goes.
Yeah, on that geopolitical note, we saw last week Russia put a minimum price on their export. They're basically nationalizing the wheat with the grain trade over there. They're putting a minimum price on that. I want to say about 250 US dollars a metric ton FOB. That's above where it's currently trading at. They're increasingly raising that export tax on there's some underlying food security issues on there, and definitely politics is going to be involved in that wheat market in the next marketing year.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back.